My name is Jesse Cohen, markets analyst for Investing.com, and this is this week's one stock to buy and one stock to dump. So stocks ended higher on Friday as investors reacted to positive developments on the COVID-19 vaccine front. The S&P 500 and the small cap Russell 2000 indexes both scored new all-time highs, while the Dow Jones Industrial Average rose to pre-pandemic levels. The tech-heavy NASDAQ, however, ended lower for the third time in 4 weeks as traders sold off technology stocks and rotated into the cyclical names that would benefit from an economic recovery. The week ahead will likely be filled with more market-moving headlines. Regardless of which direction the market goes, here is one stock to buy and one stock to dump in the week ahead. Both just so happen to be from the retail space, and both are also expected to post their latest financial results. So let's kick it off with the first name, one stock to buy, Foot Locker. Foot Locker has been a standout performer in the retail sector in recent months, benefiting from the booming athleisure trend. Growing consumer preference for comfort amid the current stay-at-home environment is also providing a boost for sales. Shares of the athletic apparel and footwear chain have more than doubled from the lows reached during the peak of the coronavirus sell-off in March, jumping 113%. The stock ended Friday's session near its best level since before the COVID-19 outbreak began about 9 months ago, giving it a valuation of $3.9 billion. We expect Foot Locker to once again post a solid quarter, making it one of the best names to own in the athletic, sportswear, and footwear space. The company reports third quarter results on Friday, November 20th, before markets open. Consensus calls for earnings per share of 53 cents. Revenue is forecast to clock in at $1.89 billion. The sneaker sellers' same-store sales will be in focus to see if they can keep up their impressive pace of growth after surging almost 19% in Q2. In addition, we're hoping management will provide guidance for its key fourth quarter, which covers the holiday shopping season, after it failed to offer a forecast of its results in the previous quarter due to uncertainty surrounding the pandemic. So we're hoping some of that clears up for Foot Locker, and we do get that guidance for Q4. In sharp contrast, stock to dump is Macy's. Macy's stock has been stuck in a spiraling downward trend for the most part of 2020 as it struggles to win over shoppers amid the coronavirus pandemic. Like many other major U.S. retail names, the New York-based department store chain has been struggling with plummeting mall traffic and a defection of customers to a new range of online and fast fashion stores. Shares which fell to an all-time low below $5 back on April 2nd are down more than 56% year to date. Shares closed at $7.36 on Friday, giving it a market cap of roughly $2.3 billion. Macy's looks set to remain under pressure in the coming days as investors brace for disappointing financial results. The company reports Q3 earnings ahead of the open on Thursday, November 19th. Consensus calls for a loss of 84 cents per share, widening from a loss per share of 81 cents in the previous quarter, and compared to earnings per share of 7 cents in the year ago period. So that's a sharp year-over-year decline in EPS. Revenue, meanwhile, is forecast to tumble 25% from the same period a year earlier to $3.88 billion. Beyond the top and bottom line numbers, investors will keep an eye on Macy's update regarding its in-store and online sales figures after plunging 35% in Q2. So keep an eye on those two names this week. Let me know your thoughts. Leave me your comments. And if you have any stocks you would like me to cover for next week, I'd love to hear that as well. Thank you for watching. Have a good one, everybody. May the trading gods be with you.